Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 24th of October 2025. The first chart is the US Dollar Index Futures. They traded slightly higher this week, albeit with a reduced spread and on quite low volume. There was very little force or effort being shown. The market was trading in absorption mode, it appears. Price did push back up to this level, but it didn't really issue any serious challenge to move above it. It's really just floated up, more likely on a lack of selling pressure than any great intent being shown in the market. That being said, the market has traded higher, despite trading inside the range of the previous bar, and both the last 2 weeks bars have traded inside the range of the 3-week bar, which was actually the stronger bar with the wider spread and almost average volume. There's no great intent to move higher, but there's no impending weakness to carry it lower. So the market continues to trade inside the previous bar's range with reducing spreads. This week's bar, being a little soft, has allowed many of the other associated markets to trade the inverse to a large extent, especially the currencies. This is E-mini S&P 500 index futures, and they traded higher this week. Last week's bar on the very high volume appears to have been absorption at this point. Prices moved up and it's closed back above the highs of the range here, and also above, just slightly above, that little up bars range. Spread did narrow to some extent, and volume was about average. So this was genuine trading. There's no anomaly in there, certainly no obvious anomaly. That being said, however, there was no great intent being shown. If there was, price would have closed higher than this little range here. So you may well get the market just coming back again and moving sideways like this, especially earlier in the week. I do note, though, that for quite some time now, probably since here, the market has really struggled to push higher. There's no impending weakness in the market to carry it lower. It doesn't look like the market really wants to go low, but it's really struggling to get higher. It's just grinding higher really slowly, doing a lot of work to make little ground. And in the long run, that's usually a concern. So it's just something to have in the back of your mind that the market is really working hard and it's not really getting anywhere. If it is, it's just grinding slightly higher. It's just something to be aware of. US Treasury 10-year note futures. They continue to trade within the range of this widespread down bar. Here's the range. This week, price made a half-hearted attempt to move past this intermediate range. That's the trading above that level. But that wasn't sustained on reduced and slightly below average volume, and price just drifted lower to close almost adjacent to the previous close. Volume was almost average, so while it was reduced and slightly below average, it wasn't really low volume, and that suggests to me that there is some absorption going on here. If there really was weakness in the market there, price would have closed much lower. Price would have pushed, if the sellers were in control, price would have pushed down more like this and at least threatened the lows of the previous bar, like that. But it didn't do that. It held up pretty well and it closed almost adjacent to the previous close. So that suggests that the market is attempting to absorb supply being drawn out at this point. And if that's the case and it's successful, it will create a temporary supply vacuum in this range just above in here. And That will allow the market to float up through it like that and up to the highs of the range. It doesn't necessarily mean price is going to break out. It does look like the market is absorbing supply, and that may create a temporary supply vacuum, which would allow the price to float up and close up close to the highs of the range up here. So let's just watch and see how that goes. Copper price futures. Copper price futures closed higher this week, and they've traded inside the range of the previous bar, which traded inside the range of its previous bar. Price is pushed up now to this little intermediate range. Following the weakness that emerged on this bar, price has traded inside that range for some time, similar in some fashion to the 10-year note futures. We noted originally that some consolidation was taking place down here. Price has broken out from that level, and now at this new level, price has spent further time in consolidation mode through there like that. And it appears that the market is going to be successful at that too, which would suggest this market would like to move higher if trading conditions allow. If you just note how the market accomplished this task, because it's kind of interesting, price broke out here, and it appeared that lots of supply was drawn out. But the next bar just moved higher with relative ease and up to what became this level in the end. And then the market attempted to push higher on 2 bars, but faded lower both times on quite high volumes. And these effectively were absorption bars. If they were weakness, the next bar would have been down, and seriously down, because it was impending weakness. But this bar emerged, looked a bit vulnerable, the next bar was up, and then the next bar was up. This is absorption taking place. This is the buyers absorbing the supply from the sellers. And in doing so, each time it creates a supply vacuum, which the next bar can move up into, because supply has eased within that little range, and price can move into it with relative ease. I expect this market would like to move higher. It may test for supply early, as these markets really like to do, something like this, early in the week. And if supply is found to be low, there may be an attempt to move higher in response. Next chart is gold price futures. Gold price futures have a pretty awkward looking bar this week, to be honest. It's an inside bar inside the range of the previous bar. We noted that supply was likely drawn out on this bar in here. In response, there was an attempt to move higher. Price then pushed lower with some real intent, only to close off its low and suggest that there is buying support in the market. There's a real battle going on here between the buyers and the sellers. Just who the buyers are and who the sellers are doesn't matter. You can see on the chart that there's been supply drawn out here. There was an attempt to buy the market before lots of supply came in. Look how high this volume still is. Lots of supplies come in, and then the market's found some support, buying support's emerged, and it's closed well off the week's low. There's a battle going on in this market. I'm not sure which side is going to end up with the upper hand, but at this point, it's pretty close to a draw at the moment, with the market closing sort of in this range, which is effectively the mid-range over the last 2 weeks. There's no doubt supply's been drawn out, and there's no doubt there's some buying support remaining in the market. So watch carefully. We'll get a response. The most important levels to watch are going to be the highs and lows of this range. You may get some hints prior to that, but a breakout above the highs of the range would suggest the buyers gained control, and a breakdown below the lows of this range would suggest that the sellers have gained control. The sellers gain control. Next level to look for is this down here to see if support emerges there, and a breakout. Well, we'll see what happens after that. Silver price futures. Silver price futures closed lower this week. In some fashion, similar to gold, it was an attempt to move higher at some point during the week. Supply was drawn out, price moved lower, buying support emerged, and the close was off the week's low. This is in response to supply being drawn out on this bar, this very high volume. Volume was above average still this week, but it was reduced. It was actually the lowest volume for the last 4 weeks. So similar to the gold market, there is supply being drawn out in this market. There is buying support attempting to absorb that supply. There's a battle going on between the buyers and the sellers in this market. And we've got an equilibrium sort of mid-bar between the two bars, similar to gold. Watch to see which side appears to gain the upper hand, and then we'll know which way the market's going to move. Light crude price futures recovered somewhat this week and poked its head back up into the original range. Here's the original range through here. Price had begun to break down, was trading adjacent to where support was found previously in the background. I do note that spread narrowed last week and volume remained about average. It was genuine, no anomalies. And this week, in response, price has moved higher. So with the narrowing of the spread last week, there was a tiny little subtle hint that some support was there in the market. And that was confirmed this week with the push higher. But it was a push higher with an increased spread on increase at above average volume. Prices pushed up into the original range, which we had been trading in for quite some time through here. I'm not sure it'll be strong enough to continue into there. We'll have to wait and see. If not, we'll see price just bumping along, probably in this level here, through there, just around the 60, 61. Just see, that was a fairly strong bar. In one bar, it's taken the last 2 weeks trading out, and part of the third week's trading, if you like, back to here, 2.5 weeks trading lower, has been removed with one up bar. So that's generally a sign of strength. We'll just see how the market plays it from here. I would expect almost certainly a test for supply early next week, and then a price movement depending on how much supply is drawn out. Into the currencies now. This is the Euro-US dollar currency pair. Price traded inside the previous bar this week, lower, and the previous bar traded inside its previous bar for that week. So you've got a bit of an equilibrium forming in here, and the market is just absorbing supply sideways. Obviously, it's the inverse to the US dollar to a large degree, and it's almost perfectly the inverse. This market does trade the inverse to the US dollar a lot more than the actual euro fundamentals. Although from time to time the fundamentals in Europe do actually play a larger part than normal, but for the most part it trades the inverse of the US dollar, and that's what it's done this week. Prices closed right at this level here, which is where the market was attempting to break out previously here. I extended that line across, and prices traded right back at that level, as it did do 3 weeks ago as well. This is the British pound currency futures. They've done a similar thing to the euro, as you would expect. Prices pulled back to this level. This market traded inside the previous bar, which traded for the most part inside its previous bar. Volume was reduced this week, so it was pretty soft and lackluster trading, as the market is just waiting for a little bit more oomph or intent to emerge in the market, in the US dollar to a large degree. And you can see that lackluster trading has emerged with the reduction in the volume. Japanese yen currency futures traded lower this week and is looking a bit vulnerable, to be honest. It's pushed below this previous support level. It's not a breakdown at this point, but price is certainly threatening to break down. You've got a last gasp level coming through here. It's not really the lows of the range. It was on quite light volume down here. I think the true strength of that level was down here, which I've got marked, and price is threatening to break below that this week. So it hasn't actually broken down yet. We'll just have to see how it trades. I would expect an attempt to recover in response, but it may prove to be a weak attempt to recover, and price then may move lower following that. So pay to keep an eye on this, and a clear break and close below this level, especially if it takes out that level as well, would certainly be a sign of weakness for the market. Aussie dollar currency futures, they traded with a very narrow spread this week on reduced and below average volume. This was also lackluster trading. Price traded inside the range of the previous bar, and there was really no intent being shown in this market. Certainly no attempt to move higher. If anything, this was more a test for supply bar. It was marking time. It was marching on the spot and waiting for something to happen, because there was very little intent being shown this week. The narrow spread and well below average volume suggests that. Bitcoin futures moved higher this week on slightly above average volume. It was pretty good volume, really. The market didn't test for supply at all below the previous bar's close. Price pushed up and then faded slightly lower in what might be a buy the offer type trading. This was absorption trading inside the range of the previous bar. There may be an early test for supply next week, just a very narrow spread, or even over the weekend like this. And if supply is found to be low, I expect this market will attempt to move higher in response, because I suspect that was an absorption bar, a bar which was absorbing the supply from the sellers, and it's traded as an up bar, mid-bar close on above average volume. That would suggest that the buyers are likely holding the upper hand. Or if they don't hold it now, they're slowly gaining the upper hand. So watch to see if there's a test for supply below the previous bar's close early next week or over the weekend. And if very little supply is drawn out, then this market may attempt to move higher, and possibly up to this range here in response. Just back to the US dollar index futures quickly to wrap up. You can clearly see that this week has traded slightly higher with a reduced spread on reduced and well below average volume, trading inside the range of the previous bar, which itself traded inside the range of its previous bar. Price has moved back up to, but hasn't really challenged this intermediate level here, where I've suspected that it'll be a little bit more difficult to move higher. I think there'll be some more supply sort of in this level in here. So there wasn't any real intent to move higher, but there's no weakness in this market at the moment. Certainly not enough weakness or price to break down. This is the lows of the range. This is the last gasp lows down here, through here. The market's holding up okay. There's no great intent to move higher. There's no impending weakness for it to move lower. So it's generally moving slightly sideways in more a grinding action, showing little or no intent. Wait to see if the market can actually muster up some increased volume, and we'll see what the market can do on that sort of volume. If we can get up towards average volume, we'll get an idea of where the intent behind the market is. Okay, thanks for your time. Back again next week. See ya.